Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Avinash Gorakshakar of Profitmart Securities and Mridul Jalan of Senora Advisors join me on the show. Many thanks to both of my guests for joining me today. Today on Hot Money, we will discuss the metal sector and whether there are any value picks there after the big sell-off that we've seen post the coronavirus issues in China. Bharti Airtel, we ask our analyst whether Bharti Airtel, the rally will continue with what the issue is that's plaguing Vodafone Idea. Will it be a two-player market or a three-player market? Page Industries, are the best days behind us? That's an important question that we need to ask. And we also talk about one large cap that the guests are recommending to their clients at this point of time. So those are the stocks that we would want to speak on in today's show. But metals as a plaque has corrected significantly. Be it the ferrous space, be it the non-ferrous space. I think the big issue is the China issue. Again, today, the index itself is down 2%, and what's happening with China certainly having an impact, be it, any of the stocks in this space. Is there any value pick here? What's the view ahead? That's something that we'll ask. I'll start with you. Overall, how do you view this space as such because of China? Is the correction overdone here, or is there more pain?
If you look at the metal index broadly, the metal index moves in line with the global markets, which is reflected by the fact that metal index made its recent bottom of around 2180, 2200 in late August, early September, and in Jan it was at a recent high of 2900 plus. Now that's a strong up move along with the global markets. This fall has come with the global market. It's a combination of global markets correcting because of coronavirus and obviously China, because the consumer of metals. Now, if you ask me, I think it's getting overdone kind of a zone, but metals being a pure momentum play, it's more of a trader's pack rather than an investor's pack. Till the negative news on corona continues, they might struggle. They are due for a bounce, and the moment you see corona overhang getting settled, they will be the biggest beneficiary of it. As the investors, we stay away from the pack. We do track Tata Steel, and that's something which we like. I think it's getting into the zone where, as an investor, I will start looking at 380, 400, because what Corona does is impacts at best a quarter until it gets deteriorated from here, which we don't believe it should be. We still are hopeful that things will get under control. And if that's the case, the bounce is due broadly. But will I be adding at these levels as a trader? Probably not.
So which are the stocks? I think Tata Steel is something that you say you would buy at lower levels. Would that be for a longer term perspective?
Yes.
Any other, it could be metal ancillary companies also. Anything that, if someone is looking to, let's say, hold for the next 2 years, because metals are basically a cyclical industry. You have to hold for that much time to play out the entire thing. Which are the stocks probably that, investors should have on their focus?
The way I look at it, Tata Steel is one, and that's definitely on our radar. The other could be more of JSW Steel, because they are more of a domestic player rather than a global play. And if China pressure continues, then the iron ore prices will also correct, they will be a beneficiary of it. Broadly, as an investment theme, we only look at Tata Steel.
Okay, Tata Steel is something that you like. What's your sense? How have you, the correction has been very steep in metals. You think that the bottom is near? How should one play the metal pack?
No, I think, Darshan, clearly my sense is metal stocks would continue to remain under pressure until and unless there is some clarity on the kind of solution for the coronavirus. I think clearly, market reports suggest that, imports from China, Japan, Korea have completely stopped. And to that extent, domestic players obviously would be, seeing lower levels of imports. But I think over the next 3 to 4 months, hopefully if the coronavirus is out, then definitely one could see a strong bounce. I think overall the demand scenario from the domestic side is yet pretty challenging. If you look at the automotive sector, still demand continues to struggle. So our sense is that, I think one should not adventurously go out and buy out at these prices. It's better to wait for at least one more quarter and probably, look at, these stocks maybe after April. I think my sense is that could be a better time to reassess the situation on the ground. And overall, I think, China has a very large inventory of steel. So in case the coronavirus spills over beyond March, then I think there are definitely, alarming reports that this steel inventory could possibly come in a lot of emerging markets, including India. So that could possibly further spoil the party for steel companies.
Let's say at this point of time, don't buy, but let's say if the index corrects or the stocks correct another 4, 5, 10%, whatever it could, which are the stocks that that investors need to watch out that if it corrects even further, for fundamentally 1 year, 2 year perspective, I should be holding these stocks?
No, I think from the frontliner, we still continue to believe, Tata Steel at around 375, 380 could be a good bet, considering that it's an integrated play. I think the other smaller player could be JSPL. Our sense is that, JSPL also could possibly be looked upon as a good domestic opportunity. I think clearly within the given pack, there are other companies like Vedanta, but I think Tata Steel and JSPL have been stocks which we have been telling our clients that obviously with a longer term perspective, once the metal, rally starts, I think hopefully the bounce would come only once there is clarity on the coronavirus. So these could be stocks, Darshan, which one could accumulate. But yes, in the short term, one has to be prepared for a lot of volatility in these companies.
Okay, that's the view that's coming in. I think Tata Steel somehow is the preferred bet if it corrects another 20, 30, 40 rupees. That's one stock that you need to keep out on your radar. The other sector which is very, very much in focus is the telecom sector. And basically with all the news that's coming in terms of the AGR, the Supreme Court verdict that is coming out, the TRI data that has come out, I think there is a clear, if you look at the data, there is one clear person who's lost out, and that is Vodafone Idea, and the two people who have gained are Reliance, and the biggest beneficiary probably is Bharti Airtel, which is again trading at close to record highs. So what's the view ahead on the telecom space? Bharti especially we want to talk about because it's trading at almost record highs. Despite all the negative news, it seems to be in a much stronger situation than probably Vodafone Idea. Avinash, you think that Bharti is, it's rallied also, there's no doubt about it. Despite all the negative news coming in, would you recommend someone to accumulate? Because if it seems that it could be a two-player market, or whatever could happen, whether Vodafone survives or no, how should one position themselves for Bharti Airtel?
No, I think clearly, despite the fact that Bharti Airtel has rallied a bit, I would believe that, the market is now getting prepared for a duopoly kind of situation. Vodafone definitely continues to struggle, and I think recent reports suggest that even the AGR money is not going to be paid immediately. They have asked for some concessions from the government. Our sense is that, typically when there are two players, there could be a lot of good pricing power for both these companies, and typically Bharti has already, raised a lot of money from the QIP, which makes it definitely a much more stronger play in the at least near term. Our sense is that the only near-term worry for Bharti Airtel would be, the tariff increases. I think the December data which came out, Darshan, clearly depicts that, tariff increases have not been taken very positively by the customer. There have been some customer, losses both for Vodafone as well as for Bharti. So I think going forward, incremental ARPUs are going to be the key trigger for Bharti. But yes, I would definitely believe on declines, Bharti could definitely be accumulated. And I think the telecom market could be headed for good days, hopefully, if we have a duopoly market, and which possibly could be realized, in the next, say, 3 to 6 months.
You see that there is a possibility that Vodafone could shut shop, and if that probably would have a big impact on banks also in that way. What's your sense on Vodafone as such?
No, but Darshan, I think clearly, it's a free market-driven market, and I think these companies have made humongous amount of money in the good old days. So I think, currently with the kind of debt they have on the balance sheet and the kind of cash flow issues are typically because of the market changes in the market dynamics. So I don't think the government is going to make any special provision. At best, there could be some kind of funding, facility given to Vodafone, but overall their operating metrics have to improve. And I think if they'll continue to lose customers, then I think that's going to be the writing on the wall. So I would not be too happy to know that, this company could be saved. I think clearly, I think the markets are giving a premium to Bharti, looking at the fact that we could be a two-player market, at least in the near term.
Is that something that you anticipate? Could it be a two-player market, Mridul?
There's a probability to it. But the way I look at it is, even if Vodafone Idea survive, they will not be a competitor to these two, which means they will not have capacity to do marketing, not have capacity to do capex, because all the money whichever they will make will go into AGR funding. Which means that if Idea has to survive, in that case also there has to be a price increase, and if Idea doesn't survive, then for these two players anyway it is beneficiary. So the way I look at it is Bharti is beneficial in both the scenarios on the medium to long term. The rally in Bharti for us has just started, both from the valuation count and best position, because they did the smart thing is of raising the money for the AQR through the QIP much before the ahead of time, and they have a much better balance sheet and P&L compared to Idea. This gives them to be in the sweetest spot. And the way I look at it is incremental good customers, high quality customers, high ARPU customers of Vodafone Idea will also move to these two players. And hence, fundamentally, positionally, we really like Bharti at these prices. I think there's a lot of steam there left.
What about Reliance? Will Bharti benefit even more than Reliance? If someone has to play the telecom space, what's the best pick? You spoke about Bharti. How will it affect Reliance also? If you want to play telecom, should you stick to Bharti or take Reliance or take a bet on probably Idea at these levels?
So Idea is as clear a word for us.
Okay.
Our best bet remains Bharti because two reasons. It's a simple business. It's a direct telecom play. Second is Reliance is a complex stock. There is a lot of moving parts into it. Fundraise to deleverage, which is the focus of Mr. Ambani, is also an important parameter there. How does the Armago deal ramp up? What happens is something which will decide the fate of the stock. So, do we like the Jio business? Yes, we like the Jio business. Do we hold Reliance? Yes, we hold Reliance. But our bigger bet will be Bharti for the telecom space.
Okay, and is debt a concern for Bharti because there is sizable debt? Would you be concerned?
They are in a position to service it.
Okay,
so it's pretty fine.
Okay, so Bharti Airtel probably is the pick in the telecom space if you want to play that. The other stock which has surprised everyone is Page Industries and it's correcting, and now a lot of brokerages have started downgrading. Now you saw the third quarter number. If you looked last year, it was a 12% volume growth. This time around, it was a 2% degrowth on the volume side. So, are the best days for Page behind them? That's something we want to know. A value quality company, but facing a lot of turbulence at this point of time. What's your sense on Page Industries? Now it's corrected significantly. Valuations are, even though now, are not cheap. So, is it a portfolio stock for you?
Yes, it's a portfolio stock for us.
Okay.
If you analyze Page would have corrected 40% from the peak in last one and a half years. That time it used to trade at around 80 price to equity, which was obviously double of the average of the consumer space. Now it is around 45-50, which is slightly below the levers and others. So the aberration in valuation is done. That is done because the segment has challenges. But if you analyze Page, what is happening is the volume degrowth is happening because of increased competition, which is something which we could foresee. The other part is Page is moving up the value chain. They are adding products, value-added product. They are moving to the happens category and other, moving from that under UG category, which means that the numbers will flow in, the margins will be better. What you start seeing currently in the volume side is a mix of economy and downgrading, which is happening in the consumption cycle. My sense is it's something which will consolidate and move on. What the volume growth was a negative surprise. The degrowth of volume, which is the lack of volume growth, was a surprise for us also. We are watching it closely, but at these prices, I think a lot of negativity is in the price. It fits our model of buying into the consolidation phase. We believe it's in the consolidation phase here.
You spoke about competition. Would that be a big concern for you, or are you seeing Page tide over this competition?
I think they can tide over this competition because the organized market will grow more than what the overall category has because of the competition. The point is the competition entered a year or so back, so they have been aggressive to get to a base market share. That happens across all industries. It is how the leader performs in that period differentiates the leader among the others, and this is where we believe Page will deliver. It's a portfolio stock which can double in couple of years for us.
Okay, so buy on dips would be a strategy that you.
We are adding at every dips.
Buy on dips is saying. And were you happy with the commentary that the management gave? They usually only spoke on conference calls.
Yeah.
Were you happy with the outlook that they had put out?
I think I am quite happy with the way they are tackling the situation. It's very, very, very evident that until the economic growth comes back, the numbers will not come back. It's a natural analogy. But the way they are handling the business, the strategies they are putting in place gives us a lot of comfort.
Okay, what's your sense on Page Industries? Do you think the worst is over? Is it something that people should start nibbling into?
Darshan, I think if you look at the last two quarters, the September quarter and the December quarter, I think one thing is very much visible is that volume growth has now started going down. In fact, it was 9% for quarter two and almost 3% negative for December quarter. And I think very clearly the top line growth has not been there. I think just a 6 to 7% top line growth is something which the market was definitely not excited and happy about from page. Our sense is that unless the company now makes a conscious effort to increase its top line, and obviously considering the kind of weak consumption trends, the slow economic conditions, I think it's going to take a long time. Although I also agree with Mridul that they have a very sound business model, a very strong brand franchise with them, but it's going to take at least maybe 1 or 2 quarters before they bounce back into a good profitability record. Our sense is that at these levels the stock may not get re-rated, and there could be a little bit of pressure considering that even the fourth quarter may be a little softer one. So our sense is that it's better to wait for some more time. I would believe that despite the fact that the stock has corrected significantly from higher levels, the incremental earnings growth is something the market is clearly looking at, and which may not come in at least for the next 1 or 2 quarters.
Okay, what's your sense on the commentaries that the management gave? Are you optimistic on?
See, I think management is definitely hopeful and making every possible effort to ensure that margin and top line growth picks up. But I think looking at the ground, reality, I think it won't be possible at least for the next 1 or 2 months. In fact, despite the fact that they have a lot of pricing power for their products, it would be really difficult to expect them to bounce back in 1 quarter or 2 quarters. So I think probably from the second half of FY21, hopefully one could see the volume pickup getting into a better trajectory.
Okay, that's the view that's coming in on Page Industries. And the last one, since the markets have corrected significantly, lot of good quality stocks probably may be up, you may be getting them at right price. I'm not saying right valuation because some of them are still high, but right prices is the word that we could want to use here. Anything that looks good on the large cap front, you've told your clients, okay, now start accumulating, or this is the stock that you need to have in your portfolio if you don't have.
No, I think Darshan, looking at the volatility in the market, we are positive on corporate banks, and we continue to like ICICI Bank. Our sense is that it's a very broad-based bank with a lot of retail as well as corporate kind of customer baskets. And I think if you look at the core banking business, I think in the last quarter the management was very hopeful that not only the ROA but even the ROE could improve significantly over the next 12 to 18 months. And despite the fact that there has been some stress across many sectors, our sense is that the bank will continue to report healthy growth both on the profit as well as on the loan disbursement numbers. And they have a well diversified basket in the sense they have the insurance business, they have the mutual fund business, the broking business. So I think in this kind of market, any decline for this stock could be a good opportunity. I think we could be reasonably confident that FY21 could be a lot better than FY20. So I think this is a safe stock to invest, and probably markets have also rewarded. The stock has corrected slightly in this market.
Okay, that's the view that's coming in on the bank, and I think you also like banks at this point of time. HDFC Bank, right?
Yeah, our topic would be HDFC Bank, while we still hold ICICI Bank and we like ICICI Bank like Avinash. But our top pick, one pick where we will say that investors can have a peaceful sleep holding a stock is HDFC Bank. If you look at HDFC Bank last 6 months, it has not done much, neither on the upside nor on the downside, because of the overhang related to the replacement for Mr. Aditya Puri. Now, for us, HDFC Bank is an institution. It is where each division has its own business leaders, are a business by itself, and hence a replacement for Aditya Puri will not be a challenge for HDFC Bank. And while Aditya Puri is a wonderful leader, but HDFC Bank is not a one-man army. Hence, once the overhang is gone, once there is a clarity of name, we will see investor interest coming back, and we will see HDFC Bank getting back into the 20-25% CAGR return story. So that's one in this volatility, that will be one pick for us.
Okay, are you not concerned because over the past 2 quarters there has been a slowdown in loan growth for them? Some of the asset quality concerns are also there. Is that a concern for you, or you believe that it will be taken care of?
So loan growth slowdown is positive for us. The way I look at it is it's a prudence, right? They are more conscious of whom they are lending, the quality of lending rather than anything. A bit of NPA here and there with economic slowdown always happens, but that will not impact the returns which they are generating for the investors.
Okay. So HDFC Bank as well as ICICI Bank are the 2 picks that our guests have spoken about. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guest Avinash and Mridul. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.